This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Example 2, gear And in the same question, you've also got geared roller. They bought similar assets under finance lease with similar terms, but geared roller is having to make her payments on 1st of January and 1st of July, whereas Geardress is paying his on the 30th of June and 31st December. They both have to pay deposits. Geardress pays 1152, geared roller pays 1910. But Geardress's deposit of 1910 includes the first instalment of 1,500. Assets estimated useful life is 9 years. I got 14 installments. Interest rate is 10%, it says. And his next payment is going to be on 30th of June. Extracts from the financial statements, which is what he's asked for. Well, you can really go to town with this. You can really, well, I suppose really go overboard, because there's just so much, basically on the screen. There is so much which needs to be reflected in the financial statements. TNCA. How much? 14. Don't write this down. Go on, sorry. 200 and... Well, I hope not. I hope not. I think it's 13,714. I think it's 13,714. I don't think it's 14,222. Am I right, or is it 14,222? It's 13,198. It's an alternative proposition. What's the estimated useful life? 9 years. What's the lease term? 7 years. Shorter lease term or useful life. 16,000 divided by 7. It's 2286. 2285714. So that's TNCA. Current liabilities. Long-term liabilities. What's the current liability? That's the current liability. The difference between 13,295 and 11,583 is the current liability. That's 1712. $1712 is current. It's that which is 835, and it's that which is 877, which is 1712. Or it's that minus that. So 1712 is current liability. And long-term liability is 11,583. Now, statement of financial position, statement of comprehensive income. There's going to be depreciation of 228586. There's going to be finance charges. That's the interest. And the interest is up here. I'm going to have to go up, I'm sorry. The interest is 742 plus 704, 1447. The question asks us for extracts, relevant extracts from the financial statements, the statement of cash flow. So within operating activities, we're going to have add back depreciation. We're going to have add back finance interest. And then we're going to have paid finance interest. And then in financing activities, we're going to have payments to finance lease creditors. And the amount paid is the capital element. There's the interest element being paid. So now we're looking for the capital element, which is paid to finance lease creditors. I think it's 2705. $2,705 is made up of the deposit of 1152 plus 1,500 plus 1,500, but minus this interest, 1,447. So that's a relevant extract from the financial statements. But you've also got the notes to the accounts. The notes to the financial statements will have, well, note number 1 will be the accounting policy note. And within the accounting policy note, there'll be something about depreciation. Depreciation on finance leased assets is calculated to spread the cost of the asset over the shorter of the lease term or estimated useful life. There'll be something about depreciation policy within the accounting policy note. There could very well be something about the finance lease interest within the accounting policy notes. And then there'll be a note about movements on TNCA. Balance brought forward, nil. Acquired during the year, 16,000. Disposed of, nil. Carry forward, cost, 16,000. Depreciation brought forward, nil. Depreciation for the year, 2286. Depreciation on disposals, nil. Depreciation carried forward, 2286. Net book value brought forward, nil. Net book value carried forward, blah, 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 blah. So there'll be a full detailed note about movements on TNCA. And then there's going to be a reconciliation between minimum lease payments and the obligation. So actually, it's easy to read that question and think they're just after that and just after that, but in fact there's a lot more. These finance leases affect a lot. They affect right the way through the financial statements. It might be that you get a lease question. I'm going to leave you to do gid roller.